Thank you again. My name is Dr. Stanley Karanja from Stan Consulting Group Limited. And happy to engage the great team this day. So about financial strategies for business, and just a bit to know Stan Consulting Group Limited. We really appreciate working with KCB Group for many years, over 7 years now, helping business enterprises, business entrepreneurs, coaching, mentoring, sharing knowledge in matters strategy, training, research services, trade, marketing, HR consulting, technology, and among other things that we do to help understand your challenges and be able to offer solutions. So we're learning about financial strategies for our business. Any businessman, first of all, thinks about how to make profit, how to make money. So definition of financial strategy in SME, it encompasses deliberate plans and actions that a company takes to achieve its financial goals. What are those plans? What are those actions? What are the plans that you have? So put your plan on paper and actions, and this way you're called upon to develop a strategic plan. Strategies in financial perspective is about securing funding, managing finances efficiently, and making sound investment decisions. Essentially, it's a roadmap whereby in your strategy, you need to know where you are, how much money you have. If you're starting a business, what business do you want to start, at what scale? And how do you need to go to the market to meet the customer? It will require money. Why financial strategy matters for SME? Because there's limited access to credit and poor financial planning are major challenges. Financial strategy drives sustainability and scalability. A strong financial plan links direct to long-term growth. And this is where we look at the customer. How much money do I require to go to the market? Creating availability of your products or services into the market. How much will I spend? On matters of acquisition of customers, you need also customer development to grow with this customer. To grow with this customer, what are the budgets do I put in place to grow with our customer? If we take our case scenario of KCB Bank, they have budget, they have plan to work with customer in the Ashara Club. What is this that they are doing? If we take this model to be the case study that we are all alive to, how many trainings shall they be done? How many engagements shall be done? How many travels for exposure shall they be done? Engagement, how do we be engaging your customers? Will you engage them physically, online, call center? How much will it cost? In every activity you do, remember there is a cost. And that cost, you must look at it with an eye that it must generate revenue at the end of the day and become profitable. Now, when you have the customer, you've taken care of the customer, you've taken care of the financial aspects and internal business process, be it product development, be it market, part of the process to increase efficiency that can serve the customer and be able to generate that revenue that you require, that you have gotten the funds invested in it. You will need people. You need, again, to know how many people do I need to deliver in my business, or how many people do I have? What is their salary scale? What is the expenses that they incur while meeting the customers and delivering the customers? And for this to happen, you need, remember again, you need to have the vision. Where are you today? Where are you going? Where do you aim to go? How will you go there? How will you know that you've gotten there? That is called strategy. So core financial strategies for SMEs, we need to, number one, revenue diversification. The money that we get, how do we diversify? Cash flow management. Through the planning, you will need to know how are my cash flows? Access to affordable capital. I'll say this is one of the way, using overdraft. There is the traditional way of having chamas bring the money together, start a business. It has its pros and it has its cons. You need a long-term loan so that you can invest in something, but always think and ask yourself, am I able to pay back? That's what I have, financial strength, and for you to have financial wellness and mental wellness. Credit management. What are my receivables? What are my payables? You need to know the money that you have sold, the money you are going to collect, the goods you have delivered and services, the invoices that you have issued, the cash sales that you have, and be able to know the payables, what you are going to pay out, reinvest, and retained earnings. What have you kept aside for a rainy day? Where have you reinvested in your diversification strategy so that you continuously make the required money to us to grow from one level to the next level? So, are you an investor? Are you an employee? Are you a business owner? Or are you self-employed? What's the difference? You have to make the difference between an investor. Investor is not necessarily in that business. He invests his money and the money works for the investor. An employee works for the business enterprise to earn a salary, a remuneration, emoluments. A business owner has a business that he runs, he owns, he knows the beginning and the end. He may be physically there or not there. Investor, not necessarily there. Self-employed, you may be employed in a service that you are the one who provides, or you have opened an enterprise, or you're in a profession that you must provide that service yourself or that product. You're self-employed. Prioritize payments. Check your cash flow. Maintain reserves. And where possible, this is where we say it's also important to have a bank supporting you for business growth. Prioritize payments and maintain reserves. Weekly tracker and supplier negotiation, improve liquidity by 20% in 6 months. This is a case study. You need accurate bookkeeping. Keep your financial transactions to have a clear picture of your business. Ensure adequate cash flow to meet short-term obligations and invest in essential assets. Optimize the use of working capital by effectively managing inventory, accounts receivable, accounts payable. Your inventory is your money. Accounts receivable, the money that you are owed because of the services or goods you have delivered. It's your money out there. And accounts payable, things that you need to pay. You must manage all this as a businessman. Cost control, again, as we had said, identify and reduce cost leakages. Automate and outsource non-core functions where possible. Shift to pay-per-service contracts. If you're able, you pay per service. Deliver this, you get this. It will help you in matters managing your costs. Strategy number 3, revenue diversification. Add complementary products and services. Why do companies diversify? Because we need to earn more revenues. We need to grow. Growth is important. Explore new channels like business to business, e-commerce. You diversify even the way you go to the market. More equitable distribution of tax burden when you have diversified companies, diversified sources of revenue. Funding and investments. We need to explore funding sources beyond traditional bank loans, such as venture capital, government grants, crowdfunding, and peer-to-peer lending. But in all of them, where do you have still the most peace is when you're able to use your bank. Investment decisions plus investment analysis methods. How long will my money that I've taken pay back? What's the profitability index of the venture that I'm getting into? Is there a discounted cash flow model to be able to inform my decision about this investment? Access to capital said consider KCB. Here it's our sponsor today. And I bet on them. This is my bank. Working capital anytime I want, and we have fantastic relationship managers. From one level, we have grown to the next level, and we've never had a challenge. So there are also the circles, the big funds, the venture capitals, asset-based financing. So strategy number 5 is about forecasting and budgeting. Use your historical data. Where was I? Where are we? How are we going? Create monthly budgets, plan for seasonality and business cycles. You also know the seasons that you do your business. Budgeting and forecasting. You need to intend to develop an outline of the direction that you're going to manage your wants to take the business. Remember, business needs and business wants, personal needs and personal wants. Many a time there is money waste by use of wants. Sometimes we can survive with the things that we have, but psychologically we get into what is called conspicuous consumption. We lose it. Typical unorganized project where it's feedback and meetings set aside, you need to plan, budget for it. Static document built once a year. Forecasting beyond that 1 year. Yeah, you must be able to see how am I going to, how with next year, and that's what's called strategy and planning. So you need to set financial goals and budgeting. Have clear goals. Have it measurable. Is it achievable? Is it ambitious? Cost control and your profitability. Have a comprehensive budget and also ensure financial planning of short-term and long-term needs. So business growth strategy, you set the business, plan where we are today, where we are going, how are we going, how will we know that we are there. Never forget to celebrate. So you need to know that business growth strategies, that we need to ensure market penetration, that is about customer, product and service development, that's also customer perspective, market expansion, strategic partnerships and mergers and acquisitions. These are very things that can help us grow our business. Develop a strategy to manage debt, because if you don't manage debt, you'll be in problems. Risk mitigation, identify potential risks such as market fluctuations, economic downturns, unforeseen circumstances. Some key performance indicators, monitor and performance, analyze discrepancies between forecasts and actuals and identify causes and have a learn from them and future planning cycles. Then you need to be specific, measurable KPIs. So some of the key indicators as we conclude: revenue diversification, as we conclude, we summarize, introduce new products, enter new markets, develop multiple revenues. Cost optimization, streamline operations to reduce waste. There's a lot of waste, even waste on people. Are you having the right people? Strategic investment, invest in innovations, research and development so that you can know where to diversify. So smart financing, cash flow management, monitor receivables, what you are getting, what you are paying, establish results for emergency and downturns, tax efficiency and compliance, take advantage of tax incentives, credits, and proper recording. Mergers and acquisition again, then regular track your financial indicators like profit margin. You need to track your profit margin, return on investment, debt equity. Use data-driven insights to make informed decisions. So other performance indicators, profitability, you need to check net profit, return on investment that you put in, and return on equity. So remember to audit your current financial practices, say 3 months, you can even send monthly, 3 months, 12 months annual plans, create a cash flow plan, explore at least one new revenue, a growth strategy, so that you can be able to see how you grow to the next level. Prepare financial documents for funding. You need to prepare financial and show evidence that you can grow the business. Thank you. Dr. Stanley Karanja was yours for today. I'm looking forward to engage with you further and build our businesses to the next level.